Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Simon Brady, editor of 1LOD, to discuss broader surveillance in the banking sector. Simon, it's great to have you with us. Welcome to TradeTalks.
Hi, Jill. It's great to be here. Thanks for having me.
You got it. We've had a series of scandals in recent years in the banking sector. Isn't the WhatsApp scandal more evidence that banks can't be trusted and that regulators need to be more stringent in enforcing a compliance culture?
Well, I think that depends on what you think happened. If you think it was an innocent technical failure that the banks didn't record these WhatsApp conversations, then maybe you think we can trust them. If you think it was a bit more serious, then you don't think so. And I think most people don't think that. The regulators don't. The banks say they had the policies in place to deal with this and that they were attested by the business. But in fact, senior managers were overriding those policies. They were using these devices. They were not doing what they were told. And the regulators feel that they were lied to. So I think everyone, in fact, was using WhatsApp. Maybe they were using Signal, Telegram, other things. And that includes people who were running significant businesses. And that sort of sends the message that senior management, who were supposed to be setting and enforcing policies, actually knew what was going on. They were ignoring compliance. And that sort of sets a pretty bad tone from the top. So I think if you say, can we trust the banks? I think the regulators would say to you, classic thing, trust but verify. We're not going to give blanket trust to the banks, and they do feel misled.
Do you agree then that the banks need broader surveillance to ensure that these regulations are being followed to the letter?
Well, it's tricky. There's plenty of regulation, and there's plenty of enforcement in the States. So in one sense, we have the framework around surveillance for the banks to follow. That said, the banks complain that they don't get enough prescription from the regulators. They don't get enough specific advice. They complain that it's immensely expensive and complicated to do this surveillance. They complain that the technology isn't available to get this stuff right. So do we need more of that surveillance technology? Maybe we don't need more of it. We need better surveillance technology, I think. We need vendors to step up and create better systems and solutions for these surveillance problems. And we need the banks to invest more money. And I think that's really important. There's a lot of nickel and diming in this business. There's a lot of banks saying, oh my God, we're not going to spend 10, 15, 20 million bucks on some of these systems. And these are institutions that make hundreds of millions, billions of dollars. So if you talk to compliance people off the record, they will tell you that they're still worried about the levels of investment that the board is pushing towards them. They don't have enough money to do some of these things. So it's a question of targeting that investment. It's getting more money from the board, it's getting more money from senior management, and then it's investing in good new solutions to solve problems in trade surveillance, in voice surveillance, and in video. Video surveillance is now a big deal. We're not even capturing that yet. The regulators haven't even stuck that in the regulations. So there's still a ton of stuff being worked on. This is not a problem that's been solved. There's still a lot of risk out there and it's not being captured.
What's the link between this and John Bolton?
Well, John Bolton is going to be speaking at one of our big conferences. Why have we chosen him? As you know, he was US National Security Advisor from 2018 to 2019, and he's been pretty outspoken about his time there. And the read across to finance is basically about culture. So do the banks have compliance culture? A lot of people think they haven't. A lot of people think they just tick the boxes. They're not really invested properly in it at a senior management level. And the read across to politics and John is what happens when culture goes bad? What happens when senior guys start doing the wrong thing? How do you push back? How does the culture in an organization control those senior people? How do rainmakers get reined in so that they don't do the wrong thing? How do you build cultures and rule sets for senior people? And how do you try and get the compliance regime to mesh with, institutional needs? In the case of government, it's to get stuff done. And in the case of banks, it's to make money. So you can't just have compliance. You can't just have all the rules. Otherwise, you get nothing done. You don't take any risk. You don't make any money. But on the other side, you've got to have some kind of parameters around these people. And John's got a pretty good set of ideas around how you control, the characters and the people who, on the one hand, are unreasonable enough to get stuff done, but on the other hand, are difficult to handle precisely because they're unreasonable and they might think, well, I can get things done better if I break the rules. So he'll be a great guy to have at the conference and a great guy speaking about this stuff.
All right, Simon. Well, we certainly look forward to the follow-up on that. We appreciate the feedback. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks very much indeed, Jill.